it really helps when you understand that you shouldn't try to predict the price of gold from fundamental reasons. You can say there's so much money printing, gold price needs to go up, but there are always these strong corrections. And we became humble because 10 years ago, when I started the fund 12 years ago, I thought I could predict all these price movements by just doing some good fundamental research, which I really lost most of their money. Elliott wave is just a form of technical analysis, and actually it tells you that every strong move up has 5 phases. And the first phase is when nobody believes in it, and it's very surprising rally. That's what happened last year, April, May, June. And then you always get a big correction, can bring you down 62%. And that's when everybody starts hating the space again. And that's the phase we're in now, and nobody's bullish. Only 20% is bullish on gold. And that's when the real recovery starts all of a sudden. I think we're on the verge of that point. And then you break out of the downtrend, the downtrend we've seen since August. And then you get the strongest rally, which is the phase 3. And that's the longest and that's the strongest rally. So you can expect a stronger rally, even stronger rally than we had last year. And it will take longer as well. And that might bring gold up towards 2,500. There's a very interesting situation around silver. You must be aware of the silver short squeeze movement. I've been following silver for 20 years. I've been an investor in physical silver for 20 years. So that's something we follow, and I think we're on the verge of a break of $30 again in silver. As you might know, silver is the only commodity, only metal, which is trading at a 50% discount compared to 1980 levels. So silver has some room to run. And Eric Sprott always told us that once silver breaks, once the paper silver market breaks, you could have a run towards $100 silver within a few weeks or even a few days. And that's why 15% of our portfolio is silver related now. And there was only 3-4% last year. The trends always take longer on the upside and the downside.
Yeah.
And especially in the metals and the precious metals, once they run, they keep running, because the run from March last year till August was an amazing run. We were up 200% from the lows, from the March lows. And then you have a correction, always takes longer than you think, always another leg down. We're on the verge of a breakout now, but we might have one more move lower. And then out of a sudden, there will be a very strong rise. And it will be a vicious rally. It might be a vicious rally, and might be that vicious that if you're not in the market, you don't dare to enter, because we will go up 4 or 5% a day, and this can go on and on for some time, just like we had last year. And if we look at our charts and if we listen to our advisors, A.V. Gilbert is a great technical analyst in this respect. I expect a jump for a rally for GDX. 50 to 80% later this year, and it can start any minute. It's very important to scale back your positions after in the end of the phase 3, and phase 3 will be a 1, 2, 3, 4, 5 in itself as well. So most of the time, it's not that difficult to see, especially when the market goes up in a parabolic way. That's the time to scale back. You see that with Bitcoin as well. Once you go parabolic, then you need to take some profit. So we expect a rally for GDX and precious metals related equities of around 50 to 80%. And then you really need to take profit, because you'll have this correction, the phase 4, and that can bring you down 20 to 40%. And then you will have another strong rally, which will bring you to the top of the cycle. This won't be the end of the commodity bull market or the gold bull market, because if you look at the very long-term chart, the monthly chart, I think you could say that we have seen a generational low in commodities around 2016, 2020.
Right.
2020 was a double bottom compared to early 2016. And a generational low means that you could have a decades-long bull market in commodities. And if you see all money printing worldwide, it's quite logical to expect inflation will turn up. We see the first signs of that. You might see more investors start to flee out of paper assets towards hard assets. Bitcoin is also a great example of this flight. If you're a buy and hold type of guy and you're 40 now and you want to save money for your retirement, you don't have to trade. You just, this is the start of a bull market, and just sit down, sit back and relax, and we'll do well.
You know, what I like about this is I can find direct correlations to the sentiment indicators that I look for. I mean, I run a conference business, so I talk to people for a living. I do this for a living, right? I talk to people, and not just professionals like yourself, but you know, we have thousands of retail investors that attend our events, that have a Monday to Friday day job and also play the market. Yeah. And those conversations are the best indicator that I have. Yeah. When I sort of just watching sentiment become a bit unrealistic, right? And I like hearing the technical version of that, which is what you pay attention to, because it's off my radar, right? It's not what I focus on. So I appreciate that. So thanks for that explanation. I didn't expect to go as deep into the LA wave as we did, but
you know, when we see markets, when we have this exhaustion gaps down, you know, after a long correction, I always know when we're very near the bottom, because then we have over 1,000 high net worth investors. But then you have this day that I arrive, that I see my mailbox, and I have 5 mails in my mailbox about people, people panicking and wanting to exit their investments. And that's always the best indicator that the bottom is near, you know, when people start to send me those kinds of emails.
Yeah, well, it's good, right? And it happens to the best of us. I mean, I'm no veteran, but I'm not new to this market. And, you know, I cut my teeth in the resource business really from 2011 forward. So it was a very tough bear market, right? Which is a great time to cut your teeth in anything, right? At the bottom, because the individuals who stick around typically are there to work hard, and they're not there for a free ride or easy money.